Are you a home buyer or property investor looking to purchase a property in Cairns in 2025 and beyond, and you're trying to research the market to establish what exactly is going on there? Well, guess what? This video is for you. Today, I'm going to jump in and analyze the Cairns property market and establish basically what is going on right now in May 2025 and forecast what is likely to happen in 2025 and beyond, based on a bunch of qualitative and quantitative data associated with the marketplace. So stick around. I'm going to analyze this market in roughly 20 minutes. So by the end of this video, you should be able to figure out whether or not this is a market worth buying in 2025. Okay, if you are an existing subscriber, welcome back. I'm pretty sure you know who I am. But for those who are watching this video for the first time, my name is Troy Bassini. I am the owner and head of research of Tropical Life Buyers Agency. Now, Tropical Life Buyers Agency is actually one of our subsidiary brands under the Life group of companies. And we basically are an on-the-ground buyers agent that services the North Queensland area. So we're on the ground in Cairns, Townsville, Port Douglas, and the Cassowary Coast. And we help a lot of people buy in these markets, whether they're investors or home buyers, and basically people in general that are trying to navigate this market, that are struggling, people that keep missing out, people that are frustrated with dealing with real estate agents, people that want access to off-market and pre-market opportunities, people that just all round want to buy the better quality assets and mitigate their risk. These are all the people we help. So yeah, we're very familiar with what's going on in these marketplaces, guys, given that we live and work and breathe in these areas. So we feel like we're very equipped to diagnose and temp check what is exactly going on here in Cairns and can offer, I suppose, a level of respectability with what we're covering off today here. But if you are someone that I think falls into any of those categories there listed below and you want to have a chat with our team to see if we might be able to give you a hand, you can give us a call on that number there, visit us on that website, jump on our socials as well to check out who we are, what we do, and yeah, that might give you some context around whether or not we could help you get into these marketplaces. So as part of this market update today, I'll be breaking down the following data to establish how the market is performing. So we're going to jump in and firstly look at what's happening on the median house price front right now as of May 2025 and how it's trended over the last 12 months and what it's likely to do in 2025 and beyond. So we've got some insights and we're going to unpack that as part of today's update. We're going to jump in and look at the supply side of the market. What is exactly going on there? Is supply low? Is supply high? How has that been trending? Because supply obviously plays into the fact that if supply is low, then we're likely to see potential price rises, particularly if demand remains high. So we're going to figure out what is exactly going on the supply side of the market. Is supply contracting? Is it going up? And then we're going to peek our head over and look at the demand side of the market, see how things are selling in the area in terms of sales volume and days on market. So we'll have a look at the demand side of the market. And then obviously once we've looked at the demand and then the supply side of the market, we can establish that is there an imbalance like between the two? And then obviously when there is an imbalance between supply and demand, what does that mean? House price appreciation. So we'll be able to answer that question as part of today. And then we're going to jump in and look at the rental side of the market then as well. Look at vacancy rates, median rents and how they're trending and how they're likely to perform in 2025 and beyond. And then we're going to peek ahead and look at the supply pipeline as well and what's that mean for Cairns and the broader FNQ region. And then I'll finish off by summarizing my predictions for 2025 and beyond. All right, let's have a look at the median house price for Cairns and what is exactly going on there. How has this median been trending? So we can see here that the median house price in Cairns as of May 2025 is currently $681,000, and it's actually up from $635,000 in May 2024. So we've essentially seen the median grow by 7.2% in the last 12 months. So look, guys, over the last 12 months, we have a rising market here. So Cairns is a market that seems to be still on the move. And look, this comes off the back of like post-COVID. Cairns went through about from that 2020 to 2023 period where it's seen rapid price growth, right? We've seen upwards of 30-40% in price growth during that period, and that's probably made up a bulk of what's happened in Cairns in terms of median price movement over the last 10 years, that sort of condensed 5-year period. And if you go back to this graph here, you can see that really steep incline there that sort of happened post-COVID. And look, many thought that Cairns was going to slow down after that. And even 12 months ago, when Cairns was hit by those big flood events, many thought that Cairns was going to be a market that was going to slow down, retract. And yeah, people were suggesting all kinds of things that, wasn't a market that you should be buying in because of all of those factors, right? But it's defied the odds, and over the last 12 months, it's obviously kept punching on and done 7.2%. So this median currently sitting at $681,000. I think that if you compare it to like a lot of the other regional markets across Queensland, it probably sits up there as one of the more expensive uh, regional hubs. And look, it comes with the territory. Cairns is obviously a big lifestyle market. It's a big regional hub with north of 150,000 people, a big service sector, employment's really low, infrastructure spending's up. So I'm not surprised that the median house price has done what it's done over the last 12 months still, because of all those macro and micro factors still sort of driving the marketplace forward. And look, I still think at $681,000, it's a median that I still think, based on when you compare it to these other regions, still, and not even the other regions, but when you start to compare it to capital city markets, I still think it has a lot of affordability in it. And people will use that affordability as a way to get into the marketplace in places like Cairns, particularly people moving from intra-region or interstate will see Cairns as an affordable option and move into these areas to capitalize on the lifestyle and affordability. But in addition to that, I still think that it's still an affordable market for a lot of the locals to get into. Like Cairns still has a lot of really good industry backbone, a really good government uh, public service sector that provides high disposable incomes in that marketplace, which allows for people to still have a lot of serviceability to get into this market still. So I still think, based on that, like those two factors, we'll see this median continue to rise. I would say in 2025 and beyond, I would say in the next 12 to 18 months into the 700s and mid 700s. I would say by sort of the end of next year or mid next year, we'll certainly see that as a result. So you, as a property investor, if you are looking at buying in this market, there is definitely upside for growth here, and we're seeing trends of this happen over the last 12 months, and over the last 4 months or 5 months, from January to May, we've also seen the market grow by around 2.3% as well. So it's well and truly on track for potentially single-digit growth this year. Maybe not double-digit growth, but single-digit growth looks to be the case for Cairns. So if you are looking to buy an investment in this market, the sooner you get on, I suppose, the better, so you can capitalize on this continuing growth cycle that's happening here. But look, guys, no one has a crystal ball in relation to where this market is likely to go. I wish I did. I'd be a very wealthy man if I did have a crystal ball. But nonetheless, if we continue to go through this update and establish that supply is low and demand remains high, then we basically know there's the right ingredients there still for ongoing capital growth in 2025 and beyond. And we're going to dissect that as part of this update as well when we look at the subsequent slides as part of this presentation. But yeah, guys, the median house price has trended over the last 12 months going up. Over the last 5 months, it's going up. And over obviously the last 5 years, it's done some crazy growth as well. But I believe it's a market that's still on the rise with plenty of wiggle room to grow still. Okay, so we've dived in and looked at the median house price, and we've established that it's trending up and it's still on that upward trajectory. It's obviously done that over the last 5 years quite aggressively. Over the last 12 months, it's done 7.2%, and over the last sort of 5 months of this year, it's done north of 2%. So it's on an upward trajectory, and stock has a big role to play in that. The level of stock obviously can make or break a marketplace in terms of how its median house price is likely to perform. So we can see here that stock levels are sitting at 0.3%, which means that there are approximately 186 houses currently listed for sale in May 2025. And if you actually compare, I suppose, these stock levels to this time last year, May 2024, listings are actually down 13%. Now, that's a big one, right, guys? So we've seen the market do 7.2% over the last 12 months. But now stock has decreased even more, right, by 13%. So for you as an investor, this is the right trends that you want to see, I suppose, when you look at this graph. You want to see a market where supply is contracting because that's one side of the equation or one ingredient that's necessary for house price growth, particularly if you have supply low and then demand exceeding that supply. So that's what you want to see, right? But on the flip side to that, it can mean that as you try to navigate this market, it's going to become difficult, even more difficult to try and buy into this market because listings are now aplenty, and then when listings are aplenty and then properties go to market for sale, there is a lot of competition because there's just not enough supply to cater for that demand. So I think we're likely to see that play out, I think, in 2025 and beyond, particularly if this trend continues, right? If you look at this trend, like going back 5 years ago, on average each month there was roughly around 300 properties for purchase at any given time. Now sitting on average roughly around what, 200 properties. So 200 to 180 properties. So a huge decrease there in the level of supply. And for Cairns to have a population base of 150,000 people plus, to only have a couple of hundred properties on the market at any given time, like this is extremely low levels of supply. And any market that's been trending with supply levels under 1% for a long period of time are likely to see price growth, right? And look, if this continues to happen, I can't see this median house price retracting or going backwards because of this level of supply. So that's going to be an interesting trend to watch if you are a property investor. As I said, this is what you want to see as a property investor, but on the flip side to that, could mean that when you go to buy, it's going to be even more challenging. But the right ingredients are here on the supply side to suggest that Cairns is still in for ongoing price growth in 2025 and beyond. All right, so we've looked at the supply side of the market. We've seen supply contracting. So in terms of like how the median house price is likely to perform going forward, that's one side of the equation that's needed for growth to occur. So the other side is we need strong levels of demand, and we're going to use the days on market metric to assess demand levels in the Cairns marketplace. So for those who aren't familiar with the days on market metric, basically all that means is how fast or how many days is it taking for properties to change hands. And obviously the higher the day on market figure shows that demand may not be as strong, and the lower the day on market number or rate suggests that the market is in strong demand. So we can see here that the days on market for Cairns currently sit at 47 days in May 2025, but days on market has actually increased by 21 days compared to this time last year. So that's an interesting one, right, guys? So we've seen actually supply contract, but on the flip side to supply, we've actually seen demand really start to steady up over the last 12 months. So that's interesting, right? So there's the best part of a 21-day difference now it's taking on average for properties to sell. So what does that mean? So it definitely means that we've seen a slowdown in demand, right? But one of the things that this doesn't tell you is what's going on at an individual suburb level. So for those who haven't been active in trying to buy in Cairns at the moment, what we're actually seeing is the lower quartile of the market. I'm saying sort of sub $700,000 properties. We're seeing very strong transaction volume and days on market averaging around 30 days. But what's actually happened is properties that are generally sitting above 900 to about 1.3, 1.4 million are taking a little longer to sell. So that I think is skewing this days on market metric to suggest that demand is slowing down. But I think it's only slowing down in a particular quartile or section of the market. Anything sub 700, which I think where a lot of the investor activity is, if you are going to be buying an investment, I think that's where a majority of you guys will potentially look at buying that sub $700,000 market. It is still a frenzy there, and things are still transacting very fast in 30 days or less from a days on market perspective. So just be mindful of that. If you are looking to buy in Cairns, individual suburbs and individual properties are different, and you have to treat everything on a case by case basis. But overall, if you round it out, right, we've seen supply really contract, but demand slow down. So that's interesting because if demand remains as what it was, like it hasn't, let's say the median in Cairns or the average for Cairns, sorry, was 30 days and we've seen a decrease in supply. That's what I thought, that's when I would suggest that we're going to see a big 2025. But what we're actually seeing now is supply decrease, but demand sort of slow down. So to me, it's sort of, they've sort of come back in equilibrium. So I don't think based on this, like we're going to see huge growth in Cairns, but I think, the market is still definitely at an imbalance where supply, I still think, exceed demand right now. So I still think we're in for price growth definitely based on the demand side of the market, but I think we're not in for huge numbers because of like that, I suppose, market sort of coming back into equilibrium. But look, guys, uh, just be mindful of that. Like, don't read too much into this 47 days and think that Cairns is really really slowing down and it may not be the market for you. I think it's only slowing down in a certain price bracket. So providing you're not buying in that price bracket, I think you'll do just fine. Okay, let's assess the rental market now and start off by looking at the median rents. I know a lot of people are looking at buying in regional markets to capitalize on the higher yields because, yeah, obviously a lot of the yields that you get in the capital cities are trash. So when it comes to Cairns, we can see here that the median rent currently sits at $585 per week for houses in Cairns. It's actually up $44 or 8.5% compared to this time last year. So Cairns rental market is growing still, guys. So that's a good thing. You're coming into a market here, guys, that's still on an upward trajectory. You're not coming into a market where things are slowing down or going backwards. I still think that 8.5% growth rate is a healthy trend, and looking at that, I think it's a trend that is likely to maintain itself, particularly if the low vacancy rate environment continues. And we're going to be looking at that slide next. But yeah, for rents to continue to grow, that's what you need. You need low vacancy rates and you need low levels of supply to continue to put upward pressure on rents in Cairns. But look, guys, this is the median here now sitting at 585. There'd be suburbs and individual properties around Cairns where you can definitely outperform that median, get a lot more rent for your property as well. Like I know out on the northern beaches, like $800 per week and above is not uncommon. And then in around the sort of inner middle ring, around 700 a week is not uncommon. And then on the inner south, you're kind of looking between sort of 550 to 750 per week now for 4 bedroom, 2 bathroom newer homes. So if you go in and do your individual research, you'll definitely be able to find some juicy rental yields there, particularly if you can buy under market value as well, because that's going to enable you to buy under market value and then get higher than average rental returns or disproportionate rental returns. But sitting at $585 per week, like if supply continues to remain low and the vacancy rate environment remains low, like the only way is up, unfortunately, for rent. So I still think these rents can push into that 620, 640, 650 over the next 12 months. And if you are going to buy an investment here, I think you are going to continue to see rental growth in your property because of a low supply environment or low vacancy rate environment. And for Cairns as a market, like if you look at this graph, it has on average roughly around 100 properties per month coming on market for rent. So that is interesting, right? Because a market so big like Cairns, as I said, 150,000 people plus, big population movements, a lot of people pushing in here for lifestyle, a lot of people pushing in to capitalize on affordability. For it to only have that amount of supply relative to that population size is a very low market. And that's all the right ingredients you want as an investor is that low supply and that upward pressure on rents to know that every year when tenancy is up on your next lease, you have the ability to up the rents because of that market pressure. Okay, let's assess the vacancy rate environment for Cairns now, given that we've looked at the median rents and we've established that they're still trending upwards, and we know that vacancy rates really plays into, why rents go up in marketplaces. So we want to see what's going on now in Cairns from that perspective. So we can see here that vacancy rates actually continue a downward trend, now sitting at 1.3%. And this equates to 147 vacancies currently available for rent in May 2025. So if you actually look at that graph there, you can see the red circle is where we are at this point in time in May 2025, 147 listings and vacancy sitting at 1.3%. And that's interesting because if you actually backdate this graph and you look at the trend, like for the last 5 years, Cairns has trended the best part of around 1% for a long period of time there. And that's really enabled the rental market to grow the way it has. It's done upwards of 30% growth over that period. And then over the last 12 months, it's done that 8%, what we just looked at just before. But what's interesting about that 8% is that that's happened despite vacancies actually going up during that period. So if you actually look at around May last year, vacancy rates sat at around 1%, and then they spiked to around 2% over that 12-month period, or over that, I wouldn't say 12-month period, over a 9-month period, up to around 2%. So even though we were in a rising vacancy rate environment, we still saw single digit rental growth in Cairns. And what does that mean? That just means that there is a lot of rental depth in Cairns. So despite the vacancy rate pushing up to that point of 2%, there was still enough demand in the marketplace to force rents to rise. So Cairns has a really high threshold when it comes to rental market depth. And what's even scarier now is that even though over the last 12 months, rents increased in a rising vacancy rate environment, over the last 4 to 5 months, it's actually started to go back now. It's actually started to go back or down to its long-term average at around 1%. So what does that mean? That means that Cairns might actually do more than single digit growth from a rental market perspective in 2025 and beyond, because if it done 8% in a rising vacancy rate environment, just imagine what it will do this year in a dropping vacancy rate environment. I think it's on track for double digit rental price growth based on this, guys, if that trend continues to maintain itself. So, look, a good thing if you're a property investor looking at getting juicy rental yields into in this market, vacancy rates are going down, reverting to its long-term trend, which means that there is still a lot of rental pressure in the market. And if you actually look at that supply level, around 100 to 130 to 150 properties a month now coming online relative to the size of Cairns, 150,000 plus in population. That supply level is very, very low. And a lot of the macro pressures still happening in Cairns, population movements, lifestyle, affordability, infrastructure investment is up, like low job vacancies. So all the right ingredients are still there to put pressure on the rental market still. And yeah, we can see it now reverting to its long-term trend. So yep, for me, I can see the rents continuing to grow here in this market. And some of the properties we've purchased this year in Cairns, they've all gotten around that sort of 5.5% rental yield and above. And we've really pushed into areas where it's very difficult to secure a rental there, unfortunately, in some of these areas. So yeah, make sure you go in and do your individual research as well, as I said before, on individual suburbs, because what you'll actually find is vacancies get even tighter and tighter. Okay, so we've looked at the median house price trend, we've looked at the supply side of the market, we've looked at the demand side of the market, then we had a look at the rental market, and it's painting a nice rosy picture that Cairns is likely to see ongoing median house price growth because of demand and supply on the sales side. And then when we look at the vacancy rate environment, we're likely to see median rents continue their upward trend as well. But look, guys, what could come in and ruin the party is a whole bunch of new supply, right? That could come in and really change the story of Cairns and change the outcome or performance of your investment. So it's important that we look at the pipeline of supply in Cairns, because if the market becomes flooded or inundated with supply and supply starts to exceed demand, we obviously will see median house price growth slow down, and then we'll obviously see median rents also slow down, because it wouldn't be the environment where demand exceeds supply, it'll be the opposite. So the way we assess future supply is by looking at the building approval levels, and that's a good indicative way we can assess what the pipeline looks like. So we can see here that in the last financial year, a total of $410 million has been spent in building approvals, or that's roughly what the project pipeline looks like in terms of spend. And if we actually look at this financial year compared to previous years, it's actually one of the lowest financial years it's been for quite some time. But that's going to be interesting, because that means that a lot of that stuff will be coming online in the next couple of years, because how the development process works is the developers get these building approvals, they spent all that money in getting approvals, and it usually takes a couple of years before they break gravel or break dirt and build an end product. So the stuff that we're seeing this year is likely to come online in sort of the next 5 to 6 years. But if we actually look at the last couple of financial years, 2021, 2022 to 2023, 2023, 2024, I think we're going to see a bulk of that supply be injected into the marketplace in the short term. So yeah, obviously that could have an effect on the performance of your property if the market is injected with an inundation of supply. If I look at sort of where we're seeing a lot of this new supply be injected into the marketplace, obviously a lot of the greenfield development is still happening on the south side of Cairns in markets like Mount Peter, Gordon Vale, Upper Bentley Park area. So there's still a whole bunch of new sort of house and land packages in there, and that's roughly where, as part of the sort of this Cairns strategic plan, is where about 30% of the new supply will come from in Cairns, and where a lot of the growth corridor is pushing towards, or a lot of the urban sprawl is pushing towards. So just be mindful if you're going to buy in the south side of Cairns, Edmonton, Gordon Vale, Bentley Park, is that you're going to be really close to where huge inundation of supply is likely to play out and staged over sort of the next 10 to 15 year period. So just make sure you buffer yourself away from that, because your property could be in direct competition to a lot of the new construction that's happening there. But look, I'm not overly concerned about what's going on here. Like, this financial year appears to be very grim. And then if you actually look at like the long-term median house price trend of Cairns, like over the last 5 years, we've seen it done, upwards of 40% growth. And that's with an average investment of around 500 million in building approvals. So it's dropping now, it's in a dropping environment. And if that continues to drop, we're obviously going to be put in an environment where supply is going to be grim. And then if demand is always strong in Cairns, then that puts an imbalance between the two, where the pipeline of supply is low and demand remains strong. That puts upward pressure on established properties. People have to fight over established properties because there's just not enough new builds happening. And when that occurs, then obviously that puts upward pressure on median house prices, and then it also rents as well, because a lot of the properties that get built also become part of the rental supply. And when there isn't a large volume of that supply happening, that obviously puts upward pressure on the rental market as well. But I'm not too concerned about what I'm seeing here, because historically, despite roughly around $500 million worth of building approvals each financial year, Cairns has grown, and now we're starting to see it decrease to $100 million less. And yeah, I think if that maintains itself as a trend going forward, I think we're likely to still see a median house price and median rental price growth in Cairns. All right, family, look, thank you. Here we are. We're at the end of the update, and I appreciate if you've stuck around all the way to the end, and I hope you got value out of what was covered here today. But if you boil it all down, right, if you go through the update and you boil it all down to two things. Is the median house price going to continue to grow? And is the median rental price going to continue to grow? Because those are the two most important things for you as a property investor to know and to understand, right? So let's start off by looking at the median house price and what my predictions are for this year. So as I covered off on, we've seen that supply has decreased over the last 12 months. But on the flip side to supply, we've actually seen demand really starting to taper off a little bit, in a certain section of the market. So we've seen that supply come down and demand go up. But previously, it was an environment where supply was really low and the demand was really high. But now we're starting to see it come back into more of an equilibrium. And as a result of that movement, I suppose, moving closer to an equilibrium, I'm not going to say that Cairns is in for a big year in terms of double-digit growth. I think it's on track for high single-digit growth. I think it'll do between 7 to 9% this year because of that imbalance. But as I said, the lower quartile of the market is where the churn and the sales volume is at the moment and the highest activity. I think if you get into that lower quartile of the market, sub 700, I think that'll outperform. I think the lower quartile of the market will do between 12 to 15%, and Cairns as an average will do anywhere between 7 to 9%. So just bear that in mind if you are buying in Cairns. Now, median rents, if vacancy rates continues to drop and stay around their long-term trend, I think as a result of that, we're likely to see double-digit rental growth in 2025 and beyond. So we saw single-digit growth in a rising vacancy rate environment. Now what I'm saying is that in a dropping vacancy rate environment where it's reverting to its long-term average of around 1%, we're going to see double-digit growth because supply is going to contract even further. And it's good to know that Cairns has a healthy threshold above 2%, to know that despite vacancy rates pushing to that level, rents still rise. But now as vacancies drop and it goes back to this trend and maintains this trend for 2025 and beyond, we're going to see double-digit growth. And that's my forecast and prediction for 2025 is the rents to do double-digit growth. So single-digit growth on the median house price front and double-digit growth on the median rental front for Cairns, guys, in 2025. My name is Troy Simbassini, owner and head of research of Tropical Life Buyers Agency. As I said, if you are an investor and you're trying to buy in these markets and you are struggling, you don't know where to buy, what to buy, when to buy, feel free to reach out to me and the team. More than happy to have an initial chat to see if we might be able to add value to your investment or buying journey. You can give us a call on that number. Visit us on that website and book in a call and we can have a chat and we can pretty much diagnose what's going on and see if we are able to help you, because we get access to a lot of properties in this area. We buy a lot of property off market, under market value, and within a very short time frame as well, so we can get you into the market sooner rather than later, so you can start making money rather than trying to sweat on realestate.com or Domain for the next opportunity. Anyway, guys, thank you for tuning in and I'll see you on the next video. Cheers.